Hello, everyone. Robert Wenzel here. Welcome to a pop-up edition of This Week in Economics. Now, a pop-up edition is something new I'm introducing where I'm just going to discuss something for a few minutes, under 5 minutes, and my top feature posts will continue to be podcasts, will continue to be on Sunday, 11 a.m. Eastern Time, 8 a.m. Pacific Time. But these pop-up posts will come whenever there's something developing with regard to the economy or the markets or whatever that I can address quickly and is relevant to what's going on at the moment. And right now, we've got some interesting action in the price of Bitcoin. Bitcoin hit $50,000 earlier this morning. It's backed off a little bit to 48,000, but a lot of people are emailing me asking me to discuss Bitcoin. So here's what I'm going to say about it. Bitcoin is climbing basically because all assets are climbing. The stock market is climbing, uh, housing is climbing, baseball cards are climbing. They're all climbing because the Federal Reserve is printing an enormous amount of money, and that money generally flows first into asset categories. So that's what we have. That's why it's going up. And there's new interest in Bitcoin, so it's sort of taking the lead as far as where the advances are occurring, but they're occurring in much uh, much beyond the Bitcoin situation. Like I said, housing, stock market, it's across the board. Uh, I actually have Bitcoin as part of the portfolio in the EPJ Daily Alert, but I'm also putting a warning with that alert, and that is be careful of regulations. The Bitcoin uh, overall cryptocurrency area is ripe for government to step in and introduce regulations. Now, we don't know what kind, but they're definitely signaling. I just put a post up at Economic Policy Journal the other day, which discussed a meeting that Janet Yellen had of a new group that was put together, and there is a focus on putting more regulation. So it's possible that when the new regulations come out, they might impact the price of Bitcoin. If the regulations just sort of clamp down on identifying who owns uh, Bitcoin and making sure there are no anonymous accounts or hidden accounts or anything like that, that won't hit Bitcoin as much. But you really don't know what they're going to do on a long-term basis because the Federal Reserve is studying their own Fed coin. And if they introduce a Fed coin, they may not want competition from Bitcoin and other cryptocurrencies. So that's my take on it. It's going up because there's uh, a bubble really in assets right now, and it could continue to for some time as long as the Federal Reserve is printing the way it is. It could continue, but but there's the regulatory risk. Plus, if or when the Federal Reserve stops printing money, the stock market's going to go down, housing prices are going to go down, and Bitcoin will go down at that point. It's not, as some people think, a a place to maintain value. It's a speculative investment. It's really an inflation hedge at this point. And with the Fed printing the way they are, we looks like we've got a lot of inflation. But with Bitcoin, it's in the lead. It's at the head of the pack with regard to the advance right now. However, there is regulatory risk, and whenever the Fed stops printing, whenever that is, the advance is going to stop and reverse probably pretty quickly. That's my take. Be sure to join me on Sundays for my feature This Week in Economics with Robert Wenzel. Also, check out my website, economicpolicyjournal.com, where I discuss inflation and the economy in general every day, Monday through Friday, and then on Saturday and Sunday. I don't stop. So check that out. That's economicpolicyjournal.com. Thanks for listening.